Good evening, ladies and gentlemen. Today is the 13th of September, and we opened after 3 days of holiday on the market, and more or less we opened flat. Right at the beginning, there was quite a steep sell-off, mostly coming from Reliance. Reliance, which had previously broken out from an all-time high level, which had been an all-time high for close to a year, had taken it out and made a good 100-point move above that. But more or less, most of that is negated. There was a little bit of red in the morning. The way positions were building up also, it looked like more or less there was a little buffer being built on the downside. But the way I interpreted it, at least, was looking quite bullish. And overall, this has been a buy on dips market. So until that is really broken, and that would be broken if 17250 is taken out convincingly, I work with the same hypothesis. I entered once again strangle into an IV spike, so I got some pretty good premiums. And as that started cooling off through the day, as in when my risk reward started to get worse, I just took an exit. So it was a good small position sizing, but still a good return on capital. And all that being said, as of now, the way I look at it, one of the main reasons for me to also exit was IT continues to remain strong. Bank Nifty has dipped today, but I think there should be very strong support around the 36,200 mark. And Reliance as well, from where it has dipped to now, it should find a good amount of demand. So all said and done, the range of 17,100 and 17,500 looks good for this expiry. But something that I'm very concerned about, which is also why I'm not carrying any trades, is on Friday closing, both the Dow and the S&P 500, they closed at a monthly low. And at this point, they are at a support zone, which is sort of a make or break zone. You would most likely expect demand to come in and the dip to get bought. But in case there's some kind of cascade from there, it would have an effect on our market as well. And yes, our market has behaved very uncoupled from the global cues for the past month or so. But if this particular level breaks, I feel that there will be a little bit of dampening of sentiment, all that said and done, which is why I'm not carrying any positions except for my Reliance position, which has benefited from the fact that initially it was a covered call, then it had to be a structure that benefits in a certain range, and right now that range is almost neutral in either direction. So what was initially a covered call that was bleeding is now not losing me anything, and also my shares have benefited into the up move, so it is a win-win. So I hope you had a good trading day. Even if you were carrying some trades from Thursday, I think that should have worked out really well. And yeah, I will catch you tomorrow. Take care. Bye-bye.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. The time is about 9:45. I entered my position at around 9:25, and I kept my position sizing quite low. Into the dip, we had a big dip in the morning. I used that dip as an opportunity to enter puts at a pretty good price. So I've shorted the 17,100, 17,500. And what I'm expecting is that even if we do dip, 17,250 should act as a resistance that will not break today. My analogy is that the Dow and the S&P 500, both of them have closed at the monthly lows, but that should be a support zone, and definitely there should be some sort of demand from buyers at that region. Now, what happens in US markets tonight will be very important. If there is continued weakness from this particular level on the Dow and S&P, then there could be further downside on our markets as well. Yes, we have been sort of decoupled from global markets for a while, but I think if we break to that level of weakness, then that is something that will percolate into our markets as well. So anyway, got a pretty good entry into this particular position. Idea will be position size is quite small, so I can bear pain until 17,250 on the downside in case we have that dip, and on the upside if we break 17,400, then I will make an adjustment. Otherwise, neither side will really have to be adjusted. Now, the only position I carried, don't like to carry positions when we have a local holiday, and that too, relatively, the range wasn't well formed as of yet. I mean, we can always work with straddle pricing was giving us 200, so 200 points up and down range. But anyway, I wanted to have a nice weekend. The only position I was carrying was this Reliance position, which at close, I mean, my mark to market at close. So on Thursday, book 5.2 and market at close was minus 74. And yeah, which at the open is now quite a lot in the green. That's because almost 92k is coming from here. But this Reliance position is now more or less at reached break even. Now something to keep note is that basically my Reliance position was initially a covered call on my Reliance shares. So I'm holding these Reliance shares. It's giving me a good profit. And the covered call was to ensure that in case Reliance doesn't do anything, I make money. That started to lose money into the up move. And my adjustment to it was done in such a way that a reversal doesn't burn me. So in case there was a continued up move, I wanted a further break even on the upside. And in case there's a reversal also, I didn't want to get hurt. What would be annoying is if on the upside also I bled, and then on the downside also I bled. So more or less this position is now come to a break-even situation. And yeah, I think from here, my break-even should be good for the rest of the month. I have almost about 130 points on the downside, 140 points on the upside. So that is a very conducive range. Yeah, after that initial morning IV spike, there's been a little bit of a cool off. And okay, taking a look at the open interest, basically quite a large amount of 17,300 positions being built up. 17,300 is pricing about slightly under 190 points. And how I would once again interpret this is not 17,300 positions that are building up expecting an even range around 17,300. This is 17,300 positions being built up with the expectation that we might hold here, maybe go a little bit lower for a bit, but eventually probably most likely would get bought. And that is why people continue to retain their 17,350 and 17,400 positions. So this sort of structure in the open interest should give you an idea that on close on Thursday, people were carrying positions around 17,350 and 17,400 and probably around 17,300 as well. So in these three strikes, and here this put writing shows you that people are expecting the dip to get bought, and this call writing is more or less to buy additional protection for people who are short the 17,350 and 17,400 puts. This is my interpretation of the OI, and that's more or less how I'm expecting the market to also play out. I think it would be unlikely. We might make a swing till 17,250 to sort of unseat some of the positions and then get bought further from there. But apart from that, I'm not expecting too much of a downside to come here. So as we're testing 17,300, calls have given up quite a bit of value. Puts have gained a little bit. I will wait and see what happens if we head lower from here and how much lower, and accordingly we'll make any changes that are required. Yeah, Reliance continues to look weak now, a good 23 points below 2,400. IT is looking strong though. So to compensate for the fact that Reliance and Bank Nifty both, and mainly Reliance, are looking extremely weak, IT after the dip has seen some amount of buying. Okay, so something to note is a down move is actually not leading to a put side IV spike. What does that mean? If there's no undue expansion on puts, it means that the short puts are not getting covered. Instead, there is a pretty good demand that is available. So what I'm expecting is that until 17,250 breaks, there most likely will be pretty good demand for put options. Pretty good supply of put options wherein people are able to sell put options expecting the dip to get bought. And so into a down move also, it's not particularly expanding my puts. So that's holding fine. And the calls have given up a decent amount of value. So I would not be too concerned on the downside at this point of time. But since, hardly 35 minutes into the trade, I'm sitting in a pretty good profit. I will start to consider, in case there starts to be a put side IV spike, I will then start to consider just taking off the position a little bit. So I'll keep you posted. The time is 10:08, and as of now, we're holding just below 17,300, and at some point the market is expecting that dip to get bought and that we head above 17,300. Okay, so this is kind of why I did not roll down my calls to 17,450. because the view was that they're more likely going to get bought, and with the smaller position sizing, it kind of made sense. One is strength in IT. Two, we have Reliance, which has now come back to the same level from where we had this big breakout. So I'm not expecting too much downside on Reliance itself. And yeah, Bank Nifty 36,200 is a support. Not expecting downside beyond that. Even if there is downside, it will have to come off the back of a lot of weakness in US markets today again. So all of that being the case, I'm now up on the position about 10 points, and my idea will be more or less to trail my stop loss by the same. So roughly about 2 points will be what I'll trail out of this position. I have my exit orders ready, and I'll keep you posted. The time is 11:07, and basically after the initial dip, that dip is now trying to get bought. What would be annoying is some kind of short covering on the calls, but I don't expect that to happen given where things are. Okay, the time is 11:30. We're not even halfway, and so the buying back that is taking place. More or less, this is my stop loss. So about 20 points from here. 17,350. That's my exit, because now there was a good IV spike in the put options in the morning, and into the up move. Now that has cooled off, and the calls had given up a lot of value. There's potentially short covering. I'm far enough away on my calls at 17,500 where I don't have to be too concerned. But at this point, it's more or less just locking in mark to market. This is the best mark to market I've been at all day. And my plan will be maximum give up 2 points from here. So I'll not be giving up anything more than that. And will also not be making any changes to this position at this point of time after the cooling off in put side IV. I don't want to take additional trades. So I'll just call it a day. It's be a good positive of a little more than 0.5%. And majority of the strength is coming from IT. Banks are still holding below 36,500. And Reliance has not really shown any strength from the lows. It's just holding. So this was the previous all-time high level. We broke out, went higher. This completely breakout got negated. Bad news also came that there's a delay in release of the Geo Next phone. And yeah, now this up move is being constituted by basically the broader Nifty and IT. So we'll not be doing any adjustments. We'll just trail a stop loss. Okay, the time is 12 o'clock, and basically I'm going to be exiting my position now, and I will go over why exactly. So basically, after the slight rise in IV earlier in the morning, now we have reached a point where IV has cooled off to a considerable extent, and there are a lot of positions that are built at 17,350, and if we make that 20 point to 17,350, I'm not expecting too much of a fall off in the 17,100 put relative to what in the interim the 17,500 call will get covered. So that being the case, best for me to just take the exit. I've benefited a good 12 points, and it's a good 0.5%, and I will call that a day. Yeah, so just shy of 2 lakhs, and good little bit more than 0.5% on the margin that I used. Okay, so let me just go over why. So you see this is the main reason I exited. IT is looking strong, and now if we have this up move, my calls are going to bleed because there will be some amount of short covering. Even in the temporary, the calls will expand. The puts won't really give up much. So I exited just as 1, 2, 3 at this higher low pattern, this ascending triangle as the technical fellows will call it, and I don't want to deal with this. That is one. Secondly, Bank Nifty has been a little suppressed. There is a good pull back chance to 36,500. Reliance, after making its low, is holding the low, so can't really consider downside to come from that. And all that said, there's good chance that once again we head back to that neutral point where everyone was building positions on Thursday, which is 17,350. And how, in which way is that going to help my position? Because my position is basically centered around 17,300, and whatever benefit I had to get, I've gone. Now that all that being said, it's still very much possible that this position loses a good amount of points by close. But I don't find that my risk to reward in this position was very good. When we dipped and my puts were far more expensive, placed so much further away, 200 points away, it made sense for me to hold this position and even enter this position at that point. But after already the position giving up as much as it has done, I don't fancy it. And yeah, that's about it. Thank you so much for watching, and I hope you had a good trading day. And in case you were carrying some positions from Thursday as well, that would have worked out really well. And yeah, I'll catch you at the next one. Take care.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.